Joining us on this weekend is Hemang Jani, Senior Vice President at Sharekhan. Hemang, thank you so much for joining us. It's always a pleasure to have you in the studio explain this market to us. There are a lot of things that are still wrong with this market. For example, the amount of the reaction that we have to every piece of information that comes in from overseas. The macro numbers, like the inflation number, that's still making people nervous. The fact that the RBI governor has to keep coming out and reassuring this market. So in a market like this, as a retail investor, what should be my strategy?
Well, yes, some of the data points that we've had are not good, particularly the CPI number was definitely way above the comfort zone, and in that kind of a scenario we've seen that the banking sector or the rate sensitive pack would see the volatility, and it could also make you feel a little uncomfortable because even the results that some of the companies have reported in the PSU banking space have not been that good. But I think that if you stay focused onto some of the good quality banks, like particularly in the private sector banks, which again have been volatile, some of this volatile times could give you a good entry point in some of the good quality banks.
So you're saying that right now, at a time like this, what we should be doing is cherry picking stocks?
Absolutely. About 10 to 15% kind of a correction from the top in some of the private sector banks like ICICI Bank, Axis Bank and Yes Bank could give you an opportunity to enter in a staggered way.
Is there anything else other than private sector banks that you think is interesting right now? In the broader market?
Definitely it makes sense to look at some of the auto names where the numbers have been good, particularly Mahindra and Tata Motors. We think that overall the growth outlook is looking much better. Even metal as a pack, we've seen a good set of data coming out from China as well as US, and so companies like Tata Steel and SAIL could provide a good 10-15% kind of an upside. Technology is a space we think that now that the rupee has started weakening against the dollar, and the fact that overall global environment continues to be very robust, so it makes sense to look at something like a TCS Tech Mahindra, which has seen a good amount of run, but it's a great entry point at this point of time also.
So what's your call on SBI at this point? It's also in your portfolio, and for the benefit of all of the viewers who are watching, should we be holding on to SBI?
See, clearly the numbers over the last 2 or 3 quarters have not been encouraging, and what is more concerning is the fact that in the previous 2 occasions the management had indicated that going forward the NPL would see some recovery. The slippages part, even in this quarter we have seen that it's a little better than the market expectations, but the fact of the matter is that this entire cycle of NPL is getting delayed, and the macro environment again is not looking too good. So banking as a pack and SBI would remain volatile, but we think that given the current valuations at about 0.9, 1 time price to book, most of these negatives are known. It's a matter of holding it for maybe another 1 or 2 quarters. By the time we should see a good pickup in that stock. So hold your breath. It's time to kind of give it some more time, and things should really pick up over the next 6 months.
Do you have a target right now on SBI?
In the near term, we are looking at a target of about 1950, but we think that there's going to be some more upside as we go along.
Now, you did say, of course, that you have faith in SBI. Is that faith also shared among the rest of the public sector banks, or is it just SBI? Is SBI special?
Well, some of the large PSU banking names like SBI or BOB or PNB, I think it's going to be more or less the same. PNB, again, the numbers were bad, but if you just see the reaction of the stock price to these numbers, they're not reacting that negatively, which means that the market had already expected a weak set of numbers, and most of these negatives are priced in. So even PNB at about 0.6, 0.7 kind of a price to book, given the fact that maybe next 1 or 2 quarters you will see some kind of a pickup in the NPL cycle, it makes sense to hold on to that as well.
Alright, so what you're saying basically is if I hold either SBI, PNB or BOB at this point, I should continue to hold it. But if I'm making a fresh investment, you'd rather have me look at a private sector bank at this point?
Yes, see, time and again we have seen that private sector banks have done much better in terms of NPL management. Their overall growth and the quality of the portfolio has been much superior to the PSU banks, so even the investor returns have been much better. So it makes sense to make new investment into the private sector banks.
Alright, new fresh investments into private sector banks, but if you hold any of the 3 stocks that Hemang mentioned among the PSU banks, it makes sense to hold on to it even further. Now Hemang has been kind enough to pick out 2 stocks that he believes are good investments at this point. The first of those two stocks is Tata Coffee. That stock is on your screen right now. It's currently trading at about 1,025. Hemang, the interesting part about this stock is that unlike Tata Global Beverages, which we've talked about several times on this show, this is actually a plantation stock. And this is something that would make a lot of retail investors nervous of the fact that coffee is a commodity at the end of the day. So are we taking on a commodity pricing risk through this stock?
Not really. This is the world's largest integrated coffee plantation company. Overall area is about 25,000 hectares. And see, most of the coffee that they make, they supply to Tata Global and to Starbucks. So they don't actually have a price risk as such. And we think that given the kind of stability in the coffee prices, in fact last year coffee prices have actually corrected about 25 to 27%. But if you look at the performance of Tata Coffee, it's been pretty steady. And of the total revenue, about 76% is coming from coffee. The rest of that is coming from tea and allied things. The equity of the company is very small, and there has been a very steady growth in the last 4 to 5 years. So we think that with that kind of a plantation and the integration that they have been able to achieve through acquisition of 8 O'Clock Coffee in the US and Canada, there has been a sharp improvement in the margins. And we think that in the next 2 to 3 years, this kind of a company can give about 50 to 60% kind of an appreciation.
Well, if we're talking about performance, there was a loss of about 12 crore rupees in their quarterly numbers, the latest numbers that came out. Does that cause you any concern?
Not really, because this was an extraordinary loss because they took a write down in one of their US companies. If you see their core operations, there has been a steady growth. And we think that in the next 2 years, the company will grow at about 30% with very high margin of about 16 to 17%. So overall, we continue to be positive there.
What's your target on Tata Coffee?
We are looking at a target of about 1,570 rupees, which would be almost about 50 to 55% kind of a growth from here on.
Alright, so first of those two recommendations is Tata Coffee with a target of 1570. There's a second recommendation at IDFC. Tell us why IDFC makes your list at this point.
Well, first of all, a very good quality management is in place, and they are one of the contenders for the banking license, which will be out somewhere in Jan, and which would really make their cost of funding much lower by almost about 1.5 to 2%. And we think that they have been able to handle the slowdown extremely well. If you look at their book, the NPL is pretty low, and they have been able to get good quality deals over a period of time. We think that this kind of a quality company, which is available at 0.9 times, there is going to be a sharp re-rating once they acquire the banking license and once they start expanding their network.
I didn't ask you your target price on IDFC. What's it right now?
We're looking at a price of about 125.
Alright, so Hemang, they're bringing us two recommendations, the first of which is Tata Coffee and IDFC, which are on your screen right now. If you have any questions about these two stocks for Hemang, write to us on the email ID that's at the bottom of your screen. You know Hemang designed a portfolio for us on the 4th of January this year. That portfolio is currently making a profit of 3.35%. Compare that to the Nifty over the same period. The Nifty is up about 0.5%. So Hemang, you are beating the Nifty quite handsomely on this portfolio. I want to go through the list of stocks in this portfolio. TCS, it's up 55% since we bought it. Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited. Aurobindo Pharma up 40% since we bought it, and Specialty Restaurant. Of course, top gainers here, TCS and Aurobindo Pharma. Top losers, Specialty Restaurant. First of all, thank you for bringing us a strong portfolio that's actually managed to make money for us in a market like this. Do you want to make any changes at this point?
Yes, I think that Specialty Restaurant, which we added, which as one of the good quality mid-cap stocks, has actually not performed well, both in terms of their operating performance and the price performance. It's almost down about 33% odd. And the recent quarterly numbers that we've seen have not been good, though at the top line level they were okay. The net profit, there was a degrowth of almost about 22%. So we think that it makes sense to actually move out of this company and move into something like a Tata Coffee, which we think has actually bottomed out, and the upside potential looks much better there.
Alright, just one change in that portfolio then. We're swapping Specialty Restaurant for Tata Coffee. I'm going to give you a recap of all of the stocks in Hemang's portfolio. There's TCS, Maruti Suzuki, ICICI Bank, SBI, L&T, Reliance Industries, Grasim, Z Limited, Aurobindo Pharma, and now Tata Coffee. If you have any questions about that portfolio, feel free to write to us. And you know that every time Hemang comes back into the studio, which is every few weeks, we will review this portfolio and see how it's doing. We have time for one last question on the show. Sanjeev has written in. He has 500 shares of Prestige Estates, which he bought at 138 rupees. He wants to know if he should hold on to that stock. Well, the profit was up about 70% this quarter, which is so impressive. What's your call on Prestige Estates?
Yes, he can hold on to it. The company is doing very well in terms of operations. The top line is growing at about almost 60%. The net profit growing at 50%. Concentrated focus on the Bangalore market. So makes sense to hold on to this one.
Actually, Hemang, largely when we've talked about this over the last year or so, we've always talked about the fact that retail investors should stay away from real estate at this point. So are there any stocks like Prestige Estates within that real estate segment that maybe are worth the retail money? Any more names you can think of?
See, it's a high beta sector where the corporate governance is always a question mark, and by and large we have seen that people have not been able to make good money. So I am not a great fan of real estate as a sector for investment, particularly by the retail investors, but some of the good quality ones, if one really wants to look at it. Godrej Property is something that we think is good, though it's an expensive stock, but we think that the management quality and the spread of the company is extremely good. Other one that we like is Oberoi Realty, which again looks quite good in terms of very zero debt or low debt kind of a company and concentrated focus. The rest of the companies we are not too comfortable.
Unfortunately, we've run out of time this week with Hemang. Keep sending in your stock questions. Email ID is at the bottom of your screen. You'll find a copy of this show on our Facebook page. Hemang, thank you so much for joining us on the show and answering all of our questions. Thanks so much for watching.